look and cut through all that noise to figure out what was really going on.
Look, the most important move you could have made this week, it wasn't chasing prices higher. And it for sure wasn't panic selling when things got a little rocky.
No, it was about something much quieter. It was about understanding where the market's attention and its money actually shifted.
And maybe most importantly, it was about realizing this wasn't a moment for panic. It was a moment for observation. So let's get into it.
This week really felt like a tale of two halves, didn't it? It all started with this huge collective sigh of relief, and then it ended with a pretty specific reality check.
So here's the quick play-by-play. Monday, everyone's just waiting, holding their breath for the Fed. Then Wednesday, bam, we get the rate cut just like everyone thought. All that uncertainty is gone. Thursday, the market celebrates, right? Dow and S&P 500 hit new all-time highs. But then Friday comes along and this sharp correction in AI-related stocks just drags the NASDAQ down with it. It felt like all that good news from Thursday just vanished. So what gives?
Okay, this is where it gets really interesting. Let's look at what actually changed versus what stayed the same. On the change side, yeah, that immediate Fed uncertainty just disappeared. Poof, gone. And pretty importantly, those short-term expectations for AI profits got a sharp adjustment. But, and this is the big but, look at what stayed the same. The Fed's overall supportive policy? Still in place. The long-term story for AI? That hasn't gone anywhere. And the basic foundation of the broader market? Still solid. This contrast right here, that's the whole story of the week.
And that brings us right to the biggest misinterpretation of the week, because what felt like a collapse was actually something totally different, something healthier even.
So you gotta ask, why did Friday feel so much like a collapse? I mean, if the foundation of the market is fine, why did things feel so jarring?
Well, it all comes down to one idea: capital rotation. And don't worry, it's not as complicated as it sounds. It just means money is quietly moving around. We saw it flowing out of some of those super hot AI stocks that have had an incredible run and flowing into other less crowded areas of the market. Think insurance, healthcare, and financials. Now, this isn't a fire alarm. It's actually a sign of a healthy market rebalancing itself.
So let's zoom in on what actually triggered that big rotation, the AI sector's long-awaited reality check.
This quote really says it all. The story of AI didn't suddenly become wrong or untrue. What happened is that the market's timeline for when it expected huge profits just collided with the actual business calendar.
And you can see that disconnect right here. AI excitement, it's been through the roof. But the actual near-term profits, well, they're still developing. We got a dose of that reality this week from earnings reports. Companies talked about making these massive investments in AI, but then mentioned that some of the big payoffs might not even hit the books until 2027. The market heard 2027, and it did what it does. It adjusted its expectations for right now. So if the game wasn't about chasing the price of tech stocks this week, what was it about? What was the right focus?
Instead of price, the words that really mattered were allocation, balance, and exposure. And this has nothing to do with making frantic moves. It's about taking a step back and calmly asking some simple questions, like how is my portfolio allocated? Is it balanced? And how much exposure do I have to any one big theme?
A chart like this is kind of a picture of what some investors were quietly doing. They weren't running for the exits. They were just reviewing, maybe noticing they were a little too heavy in tech, and then gently reallocating some capital into those other strong sectors that were holding up well, like healthcare and financials. They were just restoring balance.
Okay, so where do we go from here? The key is to watch for the real signals and try to tune out all that daily noise.
So here are 3 things to just observe, not to predict, just to watch. First, the conversation around the Fed has totally shifted. It's not about the very next cut anymore. It's about their whole game plan out to 2026. Second, for AI stocks, the question is getting smarter. It's not just, are they investing in AI now? It's, are they profiting from it? We're looking for real earnings quality. And finally, just keep an eye on those capital flows. Watch where the money is rotating to, not just where it's rotating from.
At the end of the day, this really is the key takeaway. The goal isn't to predict the future. Nobody can do that. It's just about understanding what's happening right now and staying aligned with the market's present reality. So, we hope this explainer helped you feel a little more grounded. Our whole goal here is to provide clarity that helps you stay positioned, not to create content that just makes you react.
If that sounds like a valuable approach to you, feel free to subscribe for our next weekly recap. Thanks for your time.